Good day, my dear students. In our last class, we treated a question where we derived the gross profit. I gave you a question with which we, for Acct PLC, where we prepare the trading account. The trading account, as I told you, is prepared to get the gross profit. Then the gross profit in this case now is just the buying and selling of goods and services. In that case now, all the expenses incurred by Acct were not taken into consideration. But now we are now going into the P&L account. Mind you, in our last class, when we treated the trading account, we got the gross profit as 63,500 naira. Now, all the expenses now will now be charged against the gross profit. Let's start with the first one here. Wages, 1380, sundry expenses, 2850, telephone, 1480, advertising, 580, insurance, 729, rent, 1377, salaries, 2480, and lightning, 369. Discount allowed, 510, then electricity, 384. How do you now get the net profit? We now come to the credit side, where we have the gross profit earlier derived from the trading account, which we did in our last class. You can see now, it's now brought down here. Then we now add discount received to it. That will give you 67370. From the addition of these two figures, we now subtract all the expenses here. When you add the expenses together, you now subtract this figure from this. That will give you the net profit. Mind you, the net profit here is for Acct PLC for the year 2006. The net profit is prepared here now. From what we have done here, we have just prepared the account for P&L, where we derive the net profit. Like I said in our last class, when we prepare the trading account is prepared so as to get the gross profit. The gross profit derived in the last class, as I told you, we just took note of the sales and the items on the debit side. Then on the debit side, I'm now referring you back to the trading account earlier prepared. On the trading account prepared earlier, we have the opening stock as a 23680, where we added purchases 118740. That gave us 142,420. Then we added carriage. Carriage in that case is carriage inwards. That's the cost of bringing the goods to the Acct office. That's 3,100. Add together, we got 145,520. We now deducted returns. Returns in this case now were goods earlier purchased by Acct, now returned to the supplier due to reasons known to him. So in that case now, that will be deducted. That's 3,220. Then that will give us 1,2,300. Then you now say, less goods withdrawn. Goods withdrawn in this case now may be goods damaged by fire, destroyed by fire, or goods consumed by the owner. That's Mr. Acct here. When that is deducted, what we got then was 140,450. And mind you, that's our COGAS. That is the cost of goods available for sale. And what we got in that class was 140,450. Then we now deducted the closing stock. The closing stock in that question was 30,000 naira. Then when that is deducted, we have 110,450. That's our cost. That's the cost of goods actually sold. Cost of goods sold. Then we had 110,450. Now, on the credit side of the trading account earlier prepared, we have sales. Sales in that question was 170,000. Less returns. That's sales returns. Sales returns in this case, they are goods earlier sold out, which are now returned back to the to demand here, Allied PLC. So that goods returned by through sales, sorry, from sales, we have 3,050, 2,050. When we deduct that, then we have 173,950. That we now subtract the cost from the sales. Mind you, on the credit side of the trading account, you still see 173,950. That's the net sales. That's the actual goods sold. So from that we now deduct the cost, which we got earlier. That's 110,450. That will give us our gross profit, which is 63,500, which we have brought down here. Then we now added discount received, and we got 67,370, from which we now deducted all the expenses here. But mind you, in the expenses stated here, there is no adjustment. All the expenses deducted from the credit side total here, we have not adjusted any of the expenses. And for your questions, you come across adjustment, but in this example, there is no adjustment as to the expenses. So please take note. In our next class, I'll give you a question where we adjust some of the expenses here. But this is just a straightforward question, adding together all the items on the credit side here, from where we now deducted the expenses here. So for your net profit, and mind you, what you have just done here is this profit and loss account. So you just extend the line from the one we did last class downward. So from where you now get our net profit. The net profit here is derived after deducting all the expenses from the total of the items on the credit side here. So as I said earlier, what you have done here is just a straightforward deduction. No adjustment, no stress for you. So please, mind you, by God's grace, in our next class, we go through a question where we adjust some of the expenses before we get our net profit. Thank you. God bless you.